Yeah, Stephanie, I mean, we had another hotter than expected PPI number this morning. Certainly the inflation debate rages on. I know we've talked about it a lot in the past, but just in light of everything that's sort of swirling where this market is concerned right now, as it does hover near these record highs, has it changed anything in terms of your investment thesis and how you're positioned?
No, not really, and it's good to see you, Morgan. I think that there is this push-pull continuing in the marketplace with investors. It's Delta cases and concerns there, and now we've got some Fed members and the banter of taper, or talking about tapering, whatever you want to call that, versus really strong economic data. And I know I come on here every week and I kind of cite some stats and that sort of thing, but it's really important because this is really a big picture market-driven move, and it has been all year. And to Mike's point, it's been rotation based on what's happening on the macro. So what's happening on the macro is there's a lot of good data, right? In the last week, we had non-farm payrolls that beat, wages up 4% annualized. That's very good for the consumer because the consumer is 70% of our economy. We got good initial claims today. We had ISM new orders. You know those numbers better than I do, Morgan. But that over 60 for 13 consecutive months is very positive for a CapEx cycle and forward earnings. So all of these things are positioning and explaining that the growth in the economy is actually real. We're not going to do 9% in the next couple of quarters like we will this quarter, but it's going to be above trend, and that's important. And so when I step back and I say, okay, a little bit of inflation, and by the way, we do root for a little bit of inflation, not rampant, and I don't think we're going to have it, but we are having more inflation than we have. So you have a little bit more inflation, you've got a strong economy, you've got higher earnings revisions, and oh, by the way, you've got record free cash flow growth. So all of that is very positive for risk-on assets. And I lean more cyclical, more value, because I think rates are going to move higher, and I want to play into the better economic strength.
Mike, on the topic of inflation, I mean, we did have a 4 handle on CPI and a 7 handle on PPI, which was also ahead of expectation. Those numbers, of course, are annualized. Where do you stand on that question we put to Tobias Lefkovich, that if we do get an announcement that tapering is coming this calendar year, does the market take a pullback on that, or is that largely what people are thinking about now?
I think that's probably the premise right now, that by the end of the year, we will get that announcement, and in the beginning, perhaps December, January. I don't think that it's out of the question that the market takes that as just an opportunity to back off if we still haven't had a 5% pullback, if we're up a lot more from between here and then. But I don't think that just the orderly process of initiating the taper necessarily needs to start the clock on something that really reflects truly tighter money or the first rate hike. So, look, the taper tantrum was a 6% pullback in the S&P and a big jump in bond yields. And it came out of nowhere. And before, in fact, it happened, we weren't even, the phrase taper tantrum didn't exist. So here we are trying to fight a battle from 8 years ago that, in a sense, is already won because we've been trying to manage our way through this without having a rerun. Yeah,
perhaps lessons learned. Well, shares of Micron are down about 6% right now. Morgan Stanley downgrading the stock to equal weight, lowering its price target to $75 a share from $105. The firm says, quote, winter is coming for the memory chip market, and notes that, quote, while demand has stayed strong on a relative basis, it has worsened in recent weeks, leading to a downtick in pricing expectations. It's very dramatic to basically use a Game of Thrones reference in an analyst note, Stephanie, but I do wonder what you think about this analysis here, especially as we do have this conversation about a stronger economy. And certainly we know that pricing power, at least until this point, has been pretty strong across the board for semis, given all of the supply chain issues.
Yeah, I mean, like, look, the stock's down 27% from its April highs. So I think it's already sniffing out the weakness on memory and on DRAM in particular, because they took the industry took 35% price increases over the last 2 quarters. That's not sustainable, Morgan, not in any way. But that's DRAM. NAND, on the other hand, is a lot tighter. So you want to just be careful what, you don't want to paint this all with the same brush, right? DRAM weak, NAND strong. I own Lam Research because they have a combination. 60% of their business is memory. So they have very diversified business mix, and they have new products, and they're gaining market share. The problem is it's up 23% year to date, so it's not exactly compelling, even with it down 4% today. But that's the one I would own on a further pullback.